Okay, we're going to look at the arithmetic you need to do in order to figure the federal income tax. So what we have is we have a value of $739, which is the difference between the lower tier tax and the upper tier. What that means is if your income is anything from 0 to $739, you will be taxed at a rate of 15% of that income. If your income is greater than $739, they will tax that portion of it on a rate of 25%. So what exactly does that mean? Well, let's take an example. Let's say that your taxable income is $675. Okay, you're going to pay 15% of that as federal income tax. And it's just simple multiplication. Multiply the 15% times your $675 taxable income, and you will pay $101.25 in federal income tax. That's what will be withheld. If you're in the maximum value for that range, let's say your taxable income is $739, again, they're going to take 15% of that out as federal income tax. Okay, so again, multiplication, 739 times 15% is $110.85. So that's the maximum you will pay in federal income tax if your income is from 0 to $739, because $739 is the maximum amount, and it's just straight, you multiply your taxable income times the 15%. But what happens if your income is greater than that $739? How do they figure that? Well, let's take an example. Let's say your taxable income is $1,000. Okay, you're still going to pay the 15% of that first $739. Okay, so your base rate, let's say, is going to be $110.85, but they'll tax you at 25% of the amount above $739. So what is that? How much over $739 are you? Well, to find that out, you take your taxable income, which is the $1,000, and you take the difference between that and $739. So it's a subtraction. And that difference is $261. Okay, so the first $739 you earned gets taxed at 15%, but the amount over that, up to your $1,000, is $261, and that gets taxed at a rate of 25%. Well, 25% of $261 is $65.25. So for $1,000 income, taxable income, you're going to pay $110.85 on the first $739, and on the amount that's over that, which is $261, you're going to pay $65.25. So your full tax amount will be your base tax of $110.85, and then the tax on the excess over $739, which is $65.25. So your tax amount for a taxable income of $1,000 will be $176.10. So on the $739 in income, you're being taxed $110.85. On the $261, which is the amount over $739 up to $1,000, you're being taxed at the rate of $65.25. So your total tax bill for your $1,000 in income is $176.10. And that's how it's done. If your taxable income is anything up to $739, you're just going to take that taxable income and multiply it by 15% to find how much in federal income tax you owe. But if your taxable income is greater than the $739, you're going to start out with a tax amount of $110.85, and then they're going to charge you 25% on the difference between your taxable income and the 739. So it's taking that original tax on the $739 plus the amount of tax on anything greater than that. And that's basically what you're doing. So the income you earn when it's over $739 is being taxed at two rates, 15% for the first $739 plus 25% of the excess over that $739. And that's how income tax is figured. And that's what we're using. And again, our starting value, our value that we need to look at is how does your income compare to $739? This is the arithmetic that's done. Two types. Income less than $739, just multiply it by 15%. But income greater than $739, you take the tax on the $739, which is $110.85, and to that you add the amount of tax you would owe on the excess, the difference between your taxable income and $739 times 25%. And you'd add those two values together. And that's what we will use to figure